Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Midweek Takeaway. Today we're joined by Jonathan Owen, CEO of MET1. Welcome back, Jonathan.
Hi, Phil, Kevin. Good to be with you again.
Absolutely, yeah. So the company just announced a maiden JORC Inferred Mineral Resource of 29 million tonnes for the P5 area of the Finland Black Schist Project, bringing the total resource to 57.1 million tonnes. Highlights include 52,000 tonnes of nickel, 24,000 tonnes of copper, 3,500 tonnes of cobalt, and 96,000 tonnes of zinc. The resource, calculated by Mining Plus, is cost-effective for surface mining and is adjacent to major infrastructure. You emphasise the project's potential to supply strategic minerals to the European market and noted plans for a preliminary economic assessment. So a near doubling of the JORC resource there, Jonathan. Great value added.
Absolutely, Phil. And within 12 months of listing as well, might I add. So, kudos to my team for the long days, the long nights, and the diligence in bringing us across the line so quickly. So, I've put out a stretch target for the team publicly earlier in the year of mid to long term, reaching 200 million tonnes as a total project volume. That to us is a true world-class asset, and we intend to get to that point. So notching up to nearly 60 million tonnes so quickly, I'm very proud of the team, and it's an awesome result. So what this just put this in perspective, people ask, what's the nature of the ore body, what grade is it, and so on. So what we have is basically $3 billion worth of technology metals sitting in the ground in this Black Schist project right now. And to put that into perspective in terms of scale, a world-class asset is really something around the order of magnitude of around $10 billion. So we're much a third of the way there. So that's hugely significant, and it underscores the value of what we have, and also underscores the need to get there as quickly as possible. These, at the end of the day, these are strategic minerals that Europe desperately needs. They put legislation in place to help fast-track projects like ours, to provide non-dilutive funding at certain points, such as EU grants, EU-backed financing, and so on. So the preliminary economic assessment that we're kicking off shortly, I'm hoping to get it finished by end of the year, let's say November, maybe early December, will give us the economics for the project, the NPV, the all-important internal rate of returns and capex, etc., which we then can take to EU, and that starts to unlock all those goodies for us. So it is a very exciting time. Their benchmark to get projects like ours into production is 2030. It's a hugely ambitious timescale, but it is achievable if we execute perfectly. And so far, we have executed perfectly. We've delivered on time, on drilling, on resource estimates, on assays, etc. So I'm confident we'll get there.
Absolutely, yeah. I mean, obviously, there are some strong statements in that RNS, and namely, and I quote, the addition of the P5 resource to the project portfolio brings the total value of in-situ metals to $3 billion at today's prices. Our Black Schist project is on track to becoming the world-class asset we all believe it could be. So, let's talk the world-class asset statement first. Are you more confident now that you have like a tier one asset on your portfolio?
We were always confident that we had that. You have to prove the thesis, which is what we're doing, what this resource estimate, etc., and the drilling does. But of course, we had confidence from the start. That's why we bought this asset. And in terms of world-class asset, that moniker, there's two elements to that. There's scale, but there's also profitability. So one of the metrics to class something as a world-class asset is that it generates free cash flow throughout the commodity cycle. So it's effectively last man standing when commodity prices, copper prices are on their knees. This operation would still generate profit cash at that point, whereas all others have probably mothballed on the wayside. So the opportunity we saw here was that we have Terra Firma next door. Terra Firma is one of Europe's largest, not the largest, nickel producer or battery metals producer. They also produce copper and mining the same stuff as we have, the Black Schists, and they're generating EBITDAs of 30-35% quarter in, quarter out. Apparently, when nickel is on its, at its lowest point in the price cycle. So that to us, it gave us a lot of confidence when we acquired the assets and underscores that this is a potential tier one world-class asset. The volumes will come. We've got the very quickly moved from 28 to almost just over 57 million tonnes. We want to get to 200, but I think if you're looking at a $10 billion asset, we only need to be really over 100 million tonnes, which is just within arm's reach to get to that point, that milestone. So it's very exciting, moving very quickly.
Okay, I mean, so let's talk about the valuation then. What do you think the market is missing in terms of the valuations? You know, we've talked about, on one of your presentations, you put together a peer valuation of companies, and there seemed to be a big disparity between the valuation of Metals One compared to other, you know, like Wyloo Metals, etc., and their projects. So an in-situ value circa $3 billion. That's like 100,000% increase in the valuation. I know it's not quite as simplistic as taking the market cap and saying that that's the in-situ value, but what do you think the market is missing in terms of the value here?
We are predominantly nickel. We are nickel, copper, cobalt, zinc. These are all critical metals, but nickel is sort of the headline. And nickel's been under a lot of pressure. It has hit the headlines over the last few months. The stories of the Indonesian dirty nickel that's flooding the market. This is the Chinese-funded high carbon footprint nickel that's almost 50% of the market now in terms of supply. And then we've seen headlines, BHP mothballing nickel mines in Australia as a result of that, because they just can't compete on cost. And I think that sort of tarred the whole industry with the same brush. And what people, I think, need to maybe realize, and part of our job is to try and communicate that better, is that not all nickel is equal. I referred to Terra Firma earlier. These guys, first quartile producers, lowest cost in the world in terms of production. They'll outcompete Indonesian nickel any day of the week or the quarter or the commodity cycle, and we're going to do the same. So that's the investment opportunity. The Australian mines that have been closing and have hit the headlines. These are old legacy mines that probably should never have been reopened during the last peak in the cycle. Very high operating costs, so they're always going to be the first to close when the nickel price enters that cost curve. Like I said, we're right down the other end of that cost curve. So I think it's back to answer your question. It's we have a better job to do in terms of communicating this value proposition, and it'll come. I have no doubt.
And the reason why there is such a discrepancy in the cost structure of these things is what, John?
It comes down to a number of factors. So these are hard rock nickel sulfides. In terms of Australian mines, you mean, Kevin? Are these?
Well, no. Also the extremely bad for the environment Indonesians and this. What is the main differential between them?
No, it's a very good point, and it's an interesting one because it's. So to help set the scene, expand upon your point, the Indonesian nickel that is, like I said, flooding the market. It's highly intensive in terms of carbon footprint, very questionable in terms of environmental sustainability, social sustainability. So you're having communities displaced, fishing communities unable to fish because the water's polluted. The tailings are being basically bulldozed straight into the sea. And to put some numbers around this, the carbon footprint for the nickel coming out of Indonesia is something like 57 tons of carbon dioxide per ton of nickel produced. It's huge. Compare that to the black schists that are being processed by Terra Firma, it's just over 1 ton. So it's 95% lower in terms of carbon footprint. So while the OEMs, Volkswagen, Stellantis, BMW are quite happy to, pay a low cost for these Indonesian metals and turn a blind eye to the environmental impact that's associated with them. The EU has picked up on this, and they have been pushing through legislation now to level the playing field. So we've seen the Critical Raw Materials Act, which is all about securing domestic supply and shortening supply chain risks, political risks, and so on. And then we've seen the battery passport regulations come out now. They come into effect in 2027. Volvo have already adopted this idea of the battery passport. And what the battery passport is basically a label on the side of the battery that states its origin, sustainability, the carbon footprint of that battery, and so on. And so once consumers start to see, actually what is going into their EV, what is supporting their green transition as a family or individual, they're going to ask questions. Do we need to be getting Indonesian nickel 57 tons of carbon dioxide per ton of nickel, or can we, let's get this locally on our doorstep in Finland, powered by green energy. Just it's 95% lower carbon footprint, more sustainable, kinder to the communities. We have a lot of community support involvement here. This is about jobs, and with the EU always on the front foot in terms of environmental regulations and sustainability. We're all forced, we all wish to act accordingly and build and develop and operate our mines in a sustainable manner.
What quantity of this dirty nickel is possible for them to continue to pump out? Is this a short-term link in terms of what they will produce, or is this a long-term plan?
Yeah, you could argue that this is as long as the Chinese pockets are deep. It's Indonesia, it's all Chinese funded and predominantly Chinese funded, and they are struggling now in terms of grades. Grades are dropping in Indonesia. They've mined the higher grade stuff. They are starting to get the kickback now from communities around the displacement that's going on there. And we're also seeing pressure from the likes of the US and Australia, who import some of this materials, and Europe, of course, to force Indonesia to address the environmental issues. All that's going to add to their cost base. And they've already come out in the last year or so and stated that they don't want to, they're not really able to produce nickel for less than $18,000 a ton, which is about where we are today. And like I said, Terra Firma is producing, our neighbor, our exemplar, our model, they're producing nickel with EBITs of 35%, when nickel, I think, was only at sort of $14,000-$15,000 a ton. So yeah, I think all those pressures are going to come to Indonesia or mount on Indonesia, and it's all going to, it's all fair wins for us in that respect.
And where do we see the demand for nickel going over the next sort of decade? You talked about 2030 is when this project could be online, which is, I mean, we all look back and say 2030, wow, that's a long way away, but actually it's only about 5 years now. So it's where do we see it going, like the price of nickel? Nickel was much higher and obviously has pulled back.
Exactly. Yeah, it has pulled back. And I think the nickel price has a floor now, and it's set by Indonesia. It's also set by a lot of supply coming offline, as in the Australian mines closing. So it's at an equilibrium that we're going to see probably through the rest of this year. And then a consensus opinion is that the nickel price will then move up towards the end of this year up to into the early $20,000 a ton area over the next year or so. Longer term, EV adoption continues to increase sort of unabated on a global level. We looked at WC for May year on year, 24% increase in EV sales globally, which is phenomenal, and that's set to continue. In fact, we saw yesterday, I tweeted that Jaguar have announced yesterday that they're going to go to an all-electric lineup this year, or moving into 2025 as well. So no more petrol vehicles from Jaguar in 2025. So it's the juggernaut, the super tanker is definitely heading that direction, and we're on that ship with it.
And you're not short of a bit of copper as well, and we've seen a lot of strength in that in the copper price as well. And the cobalt itself, even though it's come off huge amounts from highs, is obviously a valuable part of the commodity as well.
Oh, it is. It's it's a smaller percentage of the volume, if you like, but the value is far higher, so on a per unit basis. Yeah, we refer to our project as a nickel project, but you're absolutely right. We've got a significant amount of copper in there as well, cobalt, zinc, and there are other minerals as well in the area that lie within and above our ore bodies that we're really looking to define as well, such as manganese and another critical metal in both the digital and the green transitions.
So, from the perspective of the rest of this year, you're hoping to do a PFS the rest of this year?
The PFS will come next year. This is the PEA, so lots of acronyms to throw around. So this is the preliminary economic assessment. So this is a desktop study of the costs of mining this and then processing and the cost of selling. It's a stage gate that we go through. Like I said, it's open. The output of that's the economic parameters for the project independently generate. We can generate our own internal assessments of what the NPV, and we've done that. We're very excited about it, but we need an independent view on that. Like I said, that opens up all sorts of non-dilutive financing options for the project. And then we move into the PFS, the preliminary feasibility study, and that is a far more onerous, detailed exercise where you basically commission engineering companies to start actually designing and costing the plant.
CapExes, ROIs, and all that.
All that. You're going out to potential suppliers, getting quotes for all the components you need. It can take a year to do. So it's a big thing. So we're well placed, and say 2030 will come around quite quickly. We'll, we fully intend to be in production by that point. And we've done a countdown to that 2030 in terms of project management and looking at what is on the critical path to get us to there successfully on time and on budget. And there are a couple of long lead items in that project plan, if you like, that can often hold up a project at the last minute. and things like the environmental baseline assessments, social assessments, and so on. So we're front loading all those critical path items to now. So there will be a lot of activity this year in terms of commissioning and kicking off these studies. That'll be the preliminary economic assessment. There'll be the environmental baselining will kick off as well. The social engagement will kick off, and all of those activities will de-risk that march towards the 2030 production.
Very good. It all sounds very positive. Obviously, it's an asset that is going to be more and more in demand. But what you're saying is that at these levels now of nickel, and obviously copper, the overall project looks like it can be very, very positive in terms of finances.
Definitely. That is the case, and hence we witnessed a lot of director participation recently, both in recent placings and on market as well. We fully believe in this project. We should have named it Salamander Resources because it's got legs. That's probably an old joke. You might have heard that one before, but
you should have called it a centipede then. No, that's
got many legs. Yeah.
Good.
Very good.
Okay, well, on that note, we'll say Jonathan Owen, CEO of MET1. Thanks very much for your time.
Thank you both. Good to see you again.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net